In a few hours, the government releases the inflation report that markets have been bracing for all week. And it is landing in the middle of three separate crises that almost nobody is connecting into a single picture. Gold sits right now near a 10-week high, testing resistance, just under $4,500. Silver is testing its own resistance near $66, eyeing a path towards 72 if it breaks through. And today's number could send both metals sharply higher or trigger a real pullback within minutes of release. But the report itself is only one piece of what is actually happening right now. And I think you deserve to see the whole board before the headline number lands. Not after. Here is the twist, and I am giving it to you immediately instead of making you wait. A week and a half ago, headlines were full of optimism that a deal to reopen the Strait of Hormuz could be signed within days. That optimism has now reversed. Iran is currently saying the strait will remain closed unless the United States accepts its conditions, a direct hardening of position from where things stood just days earlier. At the same time, separate attacks on shipping vessels have been reported by both the United States and Yemen's Iran-aligned Houthi forces. And North Korea has added to the tension with a missile launch of its own. None of that made the same headlines as today's inflation report. But all of it is happening in the same narrow window of time. And all of it is quietly shaping how today's number gets absorbed by a market that is already on edge from multiple directions at once. Before I go further, I want to know who is with me right now. Tell me in the comments where in the world you are watching from, and tell me honestly whether you had heard about the reversal in the Hormuz talks or whether today's inflation report is the first piece of this story you are hearing about. I read these, and I promise you the pattern in the comments under a video like this always reveals how much of this full picture actually reaches people before they click on something like this. Let me walk through exactly where things stand right now, because the details matter more than any single headline can capture. Gold is trading close to $4,400 an ounce, having touched a 10-week high near $4,435 earlier this week before pulling back slightly on profit taking. The next real resistance level sits at the 200-day moving average, around $4,500, a level technical analysts are watching closely heading into today's report. Silver is trading above $65, with a break above $66.50, potentially opening a path toward $67.60. And further out, some analysts are watching $72 as a longer-term target if this momentum continues. The 10-year Treasury yield sits near 4.74%, its highest level since January of last year, a genuinely significant move that raises the opportunity cost of holding gold and silver, assets that pay no interest at the exact moment those metals are also being pulled higher by safe haven demand from the geopolitical tension I just described. Those two forces, rising yields pressuring precious metals lower and rising geopolitical risk pulling them higher, are pulling in opposite directions on the very same morning, and today's inflation number is likely to determine which one wins for now. If you are finding this useful already, take a moment to like this video and subscribe, because the next part explains exactly why today's report matters so much more than an ordinary monthly data release. And it connects directly to a genuine disagreement happening inside the Federal Reserve right now. Here is why this specific report carries so much weight. Economists are expecting the July inflation reading to come in around 3.4% year over year, a slight cooling from June's 3.5%. A softer than expected number would reinforce the case for a more patient Federal Reserve, building on the market's reaction to last week's weak jobs report, which briefly pushed the odds of a September rate hike down into the low 40% range. But that same market has already started pricing hike odds back up toward 52% in just the past few days, as rising oil prices from the shipping attacks and renewed Middle East tension raise fresh concerns about inflation reaccelerating. And inside the Fed itself, the disagreement is not resolved. Chicago Fed President Austin Goolsbee stated plainly this week, that he remains more concerned about persistently high inflation than about the labor market weakness that so alarmed the market just days earlier. Today's report is not landing in a settled debate. It is landing directly in the middle of an active, unresolved argument about which risk actually deserves more attention right now. And the answer that argument reaches will move gold, silver, and every rate-sensitive asset within minutes of the number crossing the wire. There is a structural force sitting underneath all of this daily noise that is worth understanding on its own, because it explains why gold has held up as well as it has through a week this volatile. China's central bank added more gold to its reserves in July than in any month since October of 2023, extending a streak of consistent buying that has continued regardless of the daily back and forth in yields, geopolitics, and Fed expectations. That kind of patient, structural buying does not react to a single CPI report. It continues underneath the daily noise, providing a real floor of demand that helps explain why gold has managed to hold near a 10-week high, even as this week's crosscurrents have pulled it in multiple directions at once. Let me make this real with two people, because none of this matters until you see how it lands in an actual life. Neither is real, but both are the kind of person you might recognize. The first I will call Barnaby 70, who has been watching gold's recent strength and assumed the path forward was simple. Rates coming down, gold going up, a clean story he could follow without much effort. When headlines this week showed the Hormuz deal reversing and yields climbing to their highest level in over a year, he found himself confused, unsure how to fit this new complexity into the simple story he had been comfortable following. The second person I will call Prudence, 68, and she has learned to hold several threads at once rather than looking for one simple story to explain everything. She understands that gold right now is being pulled by real competing forces at the same time. Rising yields working against it, geopolitical risk, and structural central bank buying working for it. And that today's inflation report is simply the next data point that tips the current balance one way or the other, not a single deciding answer that resolves the whole picture permanently. Barnaby wanted a simple story. Prudence understood that the real picture right now genuinely is not simple. And she was not confused by that complexity the way Barnaby was. The difference between them was never how much either one had invested. It was that one of them expected markets to hand him a single clean narrative. And one of them understood that weeks like this one are genuinely built from several real forces pulling in different directions at once. Now, why do so many careful, intelligent people end up like Barnaby, wanting a single simple story to explain a genuinely complicated moment? There is a well-documented reason. A preference the mind has for coherent, simple narratives over messy, multi-threaded reality, because a single story is far easier to hold on to and act on than several competing forces held in tension at the same time. The investors who navigate weeks like this, one most calmly, are rarely the ones with a simpler view of the market. They are the ones who have made peace with holding several real competing forces in mind at once, without needing any single one of them to resolve the whole picture before they can think clearly about their own plan. Now, let me be careful and honest with you, because I will not insult you with fear. And this exact subject draws people who want to frighten or excite you into a rushed decision. Today's CPI number could come in anywhere near expectations, and markets are currently pricing something close to even odds between the Fed holding steady or leaning hawkish based on how this report and the coming days unfold. Gold testing resistance near $4,500 does not guarantee it breaks through. And silver testing 66.50 does not guarantee a clean run toward 72. The Hormuz situation could still resolve calmly in the coming days, despite this week's hardened rhetoric. Geopolitical standoffs like this one have reversed course before on short notice. Anyone telling you they know exactly how today's report or this week's broader tension resolves is offering you a certainty that simply does not exist in a market with this many genuine moving parts. What I am giving you is not a prediction of today's exact number. It is the full picture sitting underneath it, so that whichever way this morning breaks, You understand the real forces at work rather than reacting to a single headline in isolation. I want to say a word about silver specifically here, because its setup right now deserves its own attention. Silver's technical picture, testing resistance near 66.50 with 67.60 and eventually $72 as potential upside targets, sits on top of a genuine structural deficit. The sixth consecutive year, the Silver Institute expects the world to consume more silver than it mines. A shortfall projected near 46 million ounces this year alone. That structural story does not depend on today's CPI print at all, but silver's near-term price action absolutely does. Given its added sensitivity to both interest rate expectations and industrial demand sentiment, which is exactly why silver's moves this week have been sharper in both directions than gold's. So let us pull this together and go back to where we started. In a few hours, the July inflation report lands, expected to show cooling to around 3.4%, arriving in the middle of a reversed Hormuz negotiation. Fresh shipping attacks from multiple parties, a North Korean missile launch, and a 10-year Treasury yield sitting at its highest level in 18 months. Gold sits near a 10-week high testing resistance under $4,500. And silver sits near its own resistance, with a real path toward $72. If momentum continues, while China's central bank keeps buying underneath all of it at its fastest pace since 2023. Today's number will not resolve every one of those threads on its own, but it will meaningfully shift the balance between them for the days ahead. And the difference between the people who navigate a week like this, one calmly, and the people who feel genuinely thrown by it comes down to one thing. Whether you expected a single simple story or understood from the start that real markets sometimes hold several true competing forces at once. Here is what I want you to carry away from this, stated as plainly as I know how. This is not a call to panic over any single data release, and it is not a call to make a rushed move today. Because balance and patience matter enormously, especially with retirement money, especially in a week with this many genuine moving parts. It is a call to hold the full picture in mind rather than reacting to whichever single headline crosses your screen first this morning. And to understand that gold and silver's structural case, central bank buying, a genuine supply deficit in silver, does not depend on any single report resolving in your favor today. Whether a modest, deliberate allocation to gold or silver belongs in your own plan depends entirely on your own circumstances, your own timeline, and your own comfort with a week this genuinely complicated. And I am not here to tell you the number. I am here to make sure you are watching the whole board today, not just the single square everyone else is staring at. Do not let anyone use today's report to rush you into a costly decision, because there will be people trying, and they get louder on days exactly like this one. And do not dismiss any single thread either. Telling yourself a missile launch on the other side of the world or a shipping attack near Yemen could not possibly matter to your own retirement account, because you just watched exactly how directly all of these threads are shaping the same morning's price action together. Those are two different mistakes, and the sensible path sits calmly between them. None of this is financial advice. Every figure I have referenced, today's CPI expectations, the current gold and silver price levels and resistance points, the 10-year Treasury yield, the Fed rate hike probabilities, China's central bank buying figures, comes directly from today's market reporting and official data releases. So you can verify every word of it yourself rather than take mine. I opened by telling you that today's inflation report lands in the middle of three separate crises colliding at once, and that gold sits right now between a breakout and a pullback. Now you understand exactly why. A reversed Hormuz negotiation, fresh shipping attacks, a missile launch, and the highest bond yields in 18 months, all sitting underneath a single number that drops in just a few hours. So let me leave you with the question underneath all of it. When this morning's report crosses your screen and everyone around you reacts to that single number alone, will you be reacting to the same narrow slice of the picture they are? Or will you already understand everything else sitting underneath it that they never bothered to connect.